Well, it's this time of year we're counting down to the end of financial year, and that means it's tax time. And wouldn't it be great if we had a top 10 list of the things we ought to be thinking about to make sure that our tax return is in on time and getting us the greatest benefit? Well, Gavin Martin is the financial advisor and founder of Cornerstone Wealth. Gavin joins us now. Hi, Gavin. Welcome back to 2020.
G'day, Neil. Great to be with you.
Great to be with you. Gavin, this time of year, I guess lots of advice and information flowing out of your office.
Yeah, it's a very hectic time for financial advisors because so many strategies need to be implemented. The actual payments have to occur before the 30th of June. So very busy time for us financial advisors.
Gavin, we're going to work through a top 10 list of things that we all need to know coming up to tax time, things that will be a benefit to us. Why don't we start with number 10 and work our way up to number 1?
Certainly. Well, we can start with the 10th one, which is it's actually a first home savers account. It's actually quite good for both people who have not purchased their first home. They can actually put money into this account and they can get a co-contribution of up to 17% on the first $5,500, and then they only pay tax on the earnings at 15%. So it's a great way to save, and sometimes it works for pastors who haven't actually lived in a home that they own, so they can benefit from it as well.
That's great. At number 10, what's number 9?
Number 9 is prepay interest. Now, I'm not a big fan of borrowing to invest, and particularly invest in shares and equities, but if that's your particular bent and that's what you're doing, you can actually prepay your interest now before the 30th of June, get the tax back or the benefit of that when you submit your tax return after the end of the financial year, rather than waiting another 13 or more months to get the benefit of that.
That one particularly for people who are heavily invested in all sorts of different areas in the share market and various other investments. Yeah,
you could do it for residential real estate as well, but just a matter of whether your bank actually allows it. Often it's more flexible with equities than it is for residential real estate.
Okay, Gavin, what's number 8?
Number 8 is offset capital gains with capital losses. So if you've got some capital gains that you've sold some assets and triggered some gains, you can offset those with some losses that you've made. So you might want to sell some of the assets that are actually gone down in value so that you don't pay any tax at all. You can actually offset those too.
What's number 7?
Number 7 is donating. This is a great one, coming off the back of the end of financial year appeal. Donating, if you can still get your donations into the organisations like Vision Radio to get a deduction for that, or you can double your donation. You can see it two different ways there.
Well, very good. And number 6?
Income protection insurance. This is if you hold insurance outside of superannuation. This type of insurance, which in the event of you needing to use it, pays 75% of your salary. So you become ill, it will pay 75% of your salary. Because those premiums are tax deductible, if you pay them before the 30th of June, similar to the prepaying interest, you can actually get the benefit of that premium a little bit earlier as well.
Number 5, Gavin.
Education tax refund. It hasn't got the take-up that the government planned. So this is all your education expenses, and the government in the last budget, the federal government announced that they were going to include uniforms in this as well. So you can claim things like computers and textbooks and all those sorts of things. I think it's up to $1,500 for a secondary student and $750 for a primary age student. So make sure you keep your receipts and claim that in your tax return.
That one very handy for families.
Yeah, definitely. Number 4 is work-related expenses. So making sure that you keep your receipts on any expenses that you might have, whether that be travel expense or uniform expense or other expenses there. Just keep track of those so that you include those in your tax return.
And number 3?
This is particularly useful if you've sold some assets and there is a gain. You can make what they call a deductible or concessional super contribution, which can significantly reduce your tax that you pay. It sort of reduces your taxable income by the amount of the contribution to super. It can be very useful in that scenario.
number 2, Gavin?
Number 2 is an eligible spouse contribution. So this is where if your spouse earns less than $10,800, you can put $3,000 into their super fund, and the government will give you a rebate of $540. So you're effectively getting you're getting $3,000 into your super fund, but it's only costing you $2,460.
And what would be the number 1 on your list of tax tips?
The number 1 is the government co-contribution. If you're earning less than $62,000, or it's actually better if you're earning less than $32,000, you can put $1,000 into your super fund and get $1,000 back from the government. So that's a nice 100% return with no risk.
Well, Gavin, going through a list of 10, the top 10, obviously for different people they're going to mean different things, but certainly to be mindful of those things is going to be important when it comes to actually getting the most out of a tax return that we might be submitting, and then certainly getting a tax refund.
Yes, definitely. There are lots of little things that you can do that in isolation they don't seem like very much, but if you add them all together they can provide thousands of dollars of savings each year, and if you add that year on year, they add up to significant amounts of money.
And Gavin, of course, the list would be longer than a top 10 when it comes to things that get a little bit more sophisticated, a little more complicated. Say you have a home-based business, or there are other streams of revenue that are coming in. I guess getting a little extra professional advice is going to be helpful this time of year. Yes,
definitely worth speaking to an accountant if your circumstances are a bit more complex. As in a home-based business, you might be able to claim some expenses on that. They're going to make sure you don't cause complexities with capital gains if you actually own the property. And as you say, there are other expenses that you could claim if you own residential property, and depreciation and those sorts of things as well.
Gavin, do you find that there are a lot of people going into tax time unaware of some of those things we listed in the top 10 list there, and actually being disadvantaged because they didn't know?
Yes, definitely. A lot of the superannuation related strategies, you actually need to make the payments into your super fund before the end of the financial year, whereas a lot of the other business and other tax or trust related strategies, you can actually do a lot of them after the financial year. It's just a matter of the accountant accounting for them in that way. But if you've got particularly some superannuation related tax saving strategies, you need to get those complete before the end of the financial year, so the end of 30th of June.
Well, there's good financial wisdom in the things you've been sharing there, a top 10 tax tips list. Gavin Martin is a financial advisor. He's the founder of Cornerstone Wealth. You'll find a link to Cornerstone Wealth on our website at vision.org.au. Gavin, it's been a pleasure. Thanks for being with us on 2020.
Thanks again, Neil. It's a pleasure.